Hi there, welcome to Kneppy Invest and welcome to the 7th of August 2025. Time is currently 3:11 p.m. on a fairly showery day on the mid-north coast of New South Wales. I've been busy all day. Went to Port Macquarie to buy action camera, DJI 360 action camera. I also bought some merino wool socks because those are the best socks to hike in. And then I picked up my parents from the airport. Their flight, a 1-hour flight from Sydney to Port Macquarie, was 10 minutes late. Can you believe it? A 1-hour flight that was 10 minutes late. Anyway, the agenda for today's video, I'll have a look at an interesting email I received the other day in relation to the biggest private companies in the world. And then we'll have a look at the ASX Today, have a look at the best and worst performing sectors, indices, also companies, and then the top 5 stocks of the day. Some rip snorters in there. Yep. Well, I think they can say that every single day. And then we'll have a look at the chart of the day, which was inspired by one of you. Yes, one of you just mentioned, can we have a look at Perenti, PRN, as a chart of the day? And then maybe one of your comments. I doubt it, though. Okay, so let's have a look or start this video with having a look at this interesting email received from Market Insights, the world's 50 most valuable private companies, July 2025, sourced CB Insights, figures rounded as of July 2025. You might be saying, how do we value private companies? I think it has to do, I could be a little bit wrong with this, I think it has to do with funding. So a lot of these companies need funding and they go to the market, not the equity market, they go to the private market asking for funding, and then whoever they get money from, they get a slice of the company, and then they can value the rest of the company by how much this company or this whoever it is, a private fund manager, how much they decide to spend or pay for that slice in the company. So interesting. The biggest private company in the world is SpaceX, valued at $350 billion. Shut up. $350 billion. I like what they do, but $350 billion. Coming in number 2 is ByteDance, which I have heard of, but I don't know much about ByteDance, valued at $300 billion. And then OpenAI is also valued at $300 billion. Then we have Stripe at $70 billion, Shine, Shein, SHEIN at $66 billion, Databricks at $62 billion, and they have the ordering really weirdly. Anthropic, I've heard of that, $62 billion, XI, $50 billion. Where's number 9? Revolt at $45 billion. And then we have Canva, an Australian company, coming in at number 10, $32 billion. They've also got a color-coded. So that's the only Australian company among the 50. Go Canva. But if they do list, it's not going to be on the ASX. I wish it was. Doesn't mean I would buy it. But what else do we have here? US. Most of them companies are US. ByteDance is Chinese. We have, that's Shine or Shein is Singaporean. A few UK companies in there. 3 UK companies, 1 Swiss, which is Klarna. That's understandable. And then also a few German companies. Or maybe the color code. Oh, no, actually, German is Cologne. It's only 1 German company in there. So there it is. A nice little graph I found in that particular email because I had no idea. Okay, now onto the ASX Today. Slightly negative day, depending. ASX 200 is down. Small caps and tech is up and resources up. What happened to Wall Street overnight? I can't remember. I usually have a look at it and mustn't have been that. Oh, that's right. NASDAQ was up big, 1.29%, but Dow Jones was relatively flat. In fact, the TSX was up 1.27%. Well, that's interesting. I have no idea what's going on. DAX and FTSE up a little bit. And right now, Asian markets are up about 0.5%. So we're down. It's all over the place. New Zealand up 0.05%. It's all over the place, isn't it? Who has any idea how the market's going to react any single day? It could go anyway. Okay, so let's go back to the ASX today. Have a look at the best and worst performing sectors. Now, during the day, the XAO and SAO have just gone sideways. Maybe a couple of times have been slightly positive, but then they fell straight back down. So that's interesting in itself. And the best performing sectors, we have discretionary, real estate and IT all up by over 0.25%. But on the flip side, healthcare and industrials both down by about 1%. What's happening with healthcare? Is it just the threat of these massive tariffs on pharmaceutical goods. Not sure how that's going to benefit Americans, but since they already pay massive amount of money for what do you call them, drugs. Okay, so let's have a look. So yeah, it's across the board, except Cochlear up a little bit, Ansell up a little bit, Neuren Pharmaceuticals up a little bit. That's in my top 5, but CSL is down 1.06%. Okay. Why is industrials down? This could be interesting. Oh, again, across the board, Brambles down 2.92%. So it's mostly because of Brambles and Transurban. Okay. Gold is up 1.1. Gold's on a really good tear, isn't it? In fact, if you have a look at the last week for gold, up 6.29%. Otherwise, another good day for small caps and a negative day for the rest, including ASX 20 down 0.24%, and the banks also down. So as we have a look at the ASX 20, I'm assuming the banks are down. We'll say 3 of the 4 big banks are down. I have no idea about iron ore. I'm going to say iron ore is down. Actually, I'm going to say iron ore is up. I'm going to say iron ore is up slightly. We already know CSL is down. And what else? Let's have a look. 10 up, 10 down. And if we have a look at the ASX 20 by market cap, CBA is down, BHP is down, CSL, but Westpac is up, ANZ is up. So 2 of the big banks are down. And looks like iron ore's had a slightly negative day as well. Best performing company has been Aristocrat. And the worst performing company has been Macquarie Group. Nothing much, really. Nothing much of note. Okay, let's have a look at the top gainers. And coming at number 1, we have EPX. At number 2, we have XReality Group, which, funny enough, is the stock of the day. Both of those companies quite small. I'll talk about EPX in a moment. So that did not make it into my top 5. So I was a little bit surprised it was up 44%. EROAD did release announcements at 1 p.m. Share price up 27.43% on the back of that announcement. So that did make it into my top 5. 4D Medical up a lot, but that's still some positive sentiment from Pro Medicus. And Nanovue is up a fair bit as well. I had a look at that one. That's up 16.91% on, I think it was a placement and listing somewhere. And I don't usually get excited about companies listing elsewhere. Best performing companies by market cap. Electro-Optic System released a presentation today. I actually was reading this presentation before the market opened, and I stopped reading it, not because it was uninteresting, but because I had to do other stuff. Here it is. Yeah, investor webinar materials, high energy. Oh, they released it last night. Did not know that. High energy laser weapon 7th of August. I think the reason why I got a little mixed up there, usually before I start looking at today's announcements, I go back to last night's announcements just to see if I missed anything. So for some reason, I thought this was released this morning, but last night, nice little presentation on their high energy laser weapon. There was a few interesting things in that, just to do with drones. Lots and lots about drones. And how effective drones are when it comes to offenses in war. Okay, so maybe that's one of the reasons why the share price of Electro-Optics is up 10.43%. Is Drone Shield up? No, it's down. So maybe it's just this presentation. I know. So that's Electro-Optic Systems. Elsight. Go Elsight. I'm very glad I bought it on the dip. And Coronado, SKS Technologies, go SKS Technologies, Core Lithium, nothing else here. Bubs Australia. I did like their Appendix 4C. Okay, now on to the top. Oh, no, wait, there, I forgot. I'm supposed to be talking about EPX. I'm pretty sure I featured EPX in the only Appendix 4C video that I've released. I think it was 5 companies in that video. I could actually tell you it would have been when would it have been, like the July 24 25, something like that. Yeah, it was July 24. EPX. We also have Farm Pride, Alcidian, RLF, which is RLF AgTech, and then also Bioxin. 5 really nice Appendix 4Cs. But today EPX is up 44% on an operations update. I had a very quick look at this and then I moved on because I was thinking, look, I don't think the market's going to react all that massive to this because they just released their Appendix 4C. So how much more information could be in this announcement that was released 2 weeks after the Appendix 4C? I could sort of understand it if the market really reacted positive to the Appendix 4C, but it didn't really all that much anyway. And when I say that, on the 24th, it rallied 22.7% and then pulled back. So a nice little rally that day, but I would have expected a better reaction to that announcement than this one. But this, yeah, anyway, so let's have a look at this announcement. Why? What is in this that have got the market really, really excited? ACV increased from 16.1 in June to 17.6, approximately 10% growth, and recurring revenue increased from 13.6 to 15.5, approximately 14% growth. Now, this is from June 24. So this is not June 25. This is over 1 year ago. Or maybe it is exactly 1 year ago. Site numbers. Okay, so I don't really see a massive amount of significant interests or significant news here that made me or would make me go, wow, because, yeah, their Appendix 4C was pretty good as well. So anyway, by the way, what I might do is just open up their Appendix 4C, just see if they provided some of these charts. So maybe the management was going, oh, I just wish we had a better reaction. So they were just mentioning mostly cash receipts, and operating cash flow. And they didn't really focus on APV, that sort of thing. So maybe that's the reason. So yeah, they didn't really mention APV at all in this announcement, looks like. Oh, ACV, that's right, ACV. So maybe there was a little bit more information in this that the market liked. Okay, so let's have a look at chart for EPX. This chart might be looking a little bit more interesting now. Man, it's not. It's not. There you go. In fact, the share price was this level not that long ago. A little bit more liquidity now, maybe, but yeah, not the chart that the sort of chart that would get me overly excited. Now, if the share price didn't rise back at the start of this year, if it was just going sideways at say 2 cents, and then we saw this sort of day, I'd get a little bit more excited. Okay, now onto the top losers, and there was nothing here. So Silex did a couple raising. In fact, I wrote down on my notes why companies list on ASX. I was just going to discuss or mention that one of the reasons why many companies list on the ASX is to get exposure to capital. It's a much better way, more efficient way to get more capital. Capital raisings. And one of the reasons why I wrote that down, it seemed like there was a lot of capital raisings announced today. And Silex was one of them, share price down 15%. Another one was Liontown Resources. It was just announcement after announcement of capital raisings. It seemed like Worker was another one. They announced a capital raising. Well, they're in trading hot for a capital raising, and that's why Silex is down. And what else do we have here? That was it. Until I got to the market cap, and then I realized I completely forgot ASX. ASX had released something today. Not surprised, the share price is down 8.58%. In fact, I left ASX out of the top 5. So this is where I'm going to discuss ASX. The whole reason I do this, sometimes I forget a company might have released something. And really, that's the only company I really could talk about here. ASX. So they did release something this morning that was a little bit negative. Maybe not 9% lower negative, but it was negative. So financial year 26 operating expense range related to ASIC inquiry. Okay, so they just increased their operating expenditure. That's it. Seems like the market is fixated with operating expenditures. We saw Telix Pharmaceuticals share price drop because of an increase in operating expenses. Anyway, so ASX expects to incur additional operating expenses of between 25 and 35 million in financial year 26 in relation to the inquiry through increased resourcing. So this is in relation to the ASX compliance assessment inquiry. There you go. That's it for ASX, and the share price is down 8% or 9%. Now let's have a look at the chart. Is this an overreaction for the market? Is this an opportunity? Now the share price, if you have a look at the weekly chart, it's trying to move in an uptrend. This could have destroyed the positive momentum. slightly positive momentum. So this might have destroyed it. Now, if the share price drops below $60, that would be really negative, but it's remaining above 64. So this is a sort of situation where I might just want to keep an eye on it if I was wanting to trade it. But personally, no. Personally, no. Okay, so it's ASX. Now on to the top 5 stocks of the day, starting off with a merger. A merger. Prophecy. Share price only up 1.35%. It was up about 15% on open. But sometimes you'll see that. Now, the chart for Prophecy looks pretty bad. So there would have been a little bit of buying or a little bit of selling when some shareholders saw the share price rally on open. They would have went, oh, I can now sell my shares in this stock. So they've announced a merger with Complexica. Now, it seems like based off the presentation, I did have a look at the presentation. Now, based off the presentation, that this does look like a merger, maybe not a merger of equals in terms of who's going to finish up with the greater amount of shares or whatever you want to call it. But it does look like Complexica, even though it has lower revenue, is a better company just based off margins because they're EBITDA profitable, maybe even profitable, but Prophecy is not. Now, Prophecy has been around for a while. And when I say a while, I mean maybe 20, 30, 40 years. Complexica is a fairly new company. Now, just going through this presentation, it seems like this is a natural fit. Now, maybe it seems like a natural fit because the presentation might be pretty good. Now, this merged group is going to change the name to Complexica. That's another reason why I think this is more of a Prophecy realizes they're not really performing all that well, and maybe Complexica is doing a better job, and maybe the management said, hey, we don't really want to list on the ASX, go through that whole process. Maybe we could sort of combine, and that's why we can list. And the other thing is they're changing the name to Complexica, and they're changing the ticker code to CPX, another company with X in the ticker code. Anyway, so they go through this. They go in this presentation. They go through the reasons why, how they're slightly different, but they're complementary. They also talk about how it's going to benefit the merged group in terms of what do they call it? The buzzwords they always use, and I can't remember right now. Buzzwords. There's buzzwords. Synergies. How because of synergies, this merge group is going to be much better. So they do use quite a few buzzwords like synergies and here we go, synergies and efficiencies of 4 million per year to support Merge Co. in driving growth and enhanced scale. So they do believe that this merge company will be beneficial for the company as a whole. They also go through the financials, and if we go down, financials of both companies, because you can actually see the difference of both companies. Somewhere here, they got a little, it's a fairly big. The other thing is Australian Ethical has a big stake in Prophecy, which was a little bit surprising. Australian Ethical owns 6.7% of the merge company. So that was actually a little bit interesting. I didn't realize that. And here we go, the financials. So in this, you can just see how both companies are performing. So Prophecy, revenue of 23 million, and Complexica has revenue of 12.5 million. So almost half of Prophecy. But Complexica is EBITDA positive by 2 million, but Prophecy was EBITDA negative by 3.3 million. And Complexica was operating cash flow positive by 2 million, and Prophecy was negative. So even though Prophecy is a bigger company by revenue, Complexica looks like the better company because of margins, better margins. Anyway, so I can sort of understand why they changed their name to Complexica because, well, Prophecy has been a really big disappointment. Okay, so I found this really interesting, and it could be an interesting play in the future, particularly if Complexica turns out to be a much better company and they don't lose that betterness by merging with Prophecy. Maybe that's my only slight worry is Complexica is a good company, but Prophecy, big meh. So if you merge a pretty good company with a meh company, what do you end up with? Maybe a meh company. Don't know. We'll wait and see. So let's have a little chart for Prophecy, and you'll see this has been a massive disappointment. So a SaaS company, not a SaaS company, a software company maybe SaaS, a software company that has tried to grow, but has just really struggled. In fact, this daily chart looks horrendous. Share price has dropped from a $1 all the way down to 38 cents. Weekly chart. Ooh, in fact, the share price is at COVID-19 or COVID-19 lows. Share price got as high as $1.80 back in 2021. There you go. So yeah, the weekly chart looks pretty horrible. And in fact, if you go even further back, you can see there was a period of time, 2015, where there's a fair bit of interest in this company, but that just didn't go anywhere. And this is the chart of a crappy company. I'm going to say this is the chart of a crappy company. This is a chart of a non-investable company. So that's prophecy. Okay, so maybe this merger will bring a better company onto the ASX as a merged company. Company number 4, we have AMP. Share price up 5.1%. There you go. On results, there are a couple of companies released results today. AMP, and I think it was Light and Wonder, but I'm skipping Light and Wonder because no presentation. Don't release a presentation. I'm not going to include you. Okay. It's again another American company that just releases results. That's it. No presentation, no media release, boring. Okay, so AMP announces first half 25 results. So these are not full-year results. And everything seems to be up. Profit up a little bit, 9.2%. Platforms, profit up 7.4%. Superannuation, profit steady. AMP Bank, profit up 2.9%. And New Zealand Wealth Management, profit up 11.8%, although it's a fairly small part of the business. Statutory profit, 98 million, first half 103 million. So statutory profit actually dropped, reflecting planned business simplification and litigation costs. So business simplification, I'm not sure what exactly that is. Earnings per share up 18.2% and first half dividend of 2 cents. So I thought this was an okay half year for AMP. For a company that has historically been a very much a disappointing company on the ASX, I thought this was pretty good. Now, the most important thing is how these results meet expectations. Did they meet expectations, or was it a beat? So it's maybe a slight beat. AMP shares rebound from early drop as UBS sees second half improvement. Oh, so share price actually was down initially. ASX latest blunder shows need for new ownership model. Okay, let's have a look. Oh, they mentioned AMB Bank's net interest margin outlook was a positive. There we go. So with financial year 25 revenue margin, overall cost guidance reaffirmed, and better bank net interest margin, we think the market will largely look past a weaker first half to improved second half outlook. So it looks like the results were a little bit weaker than expected, but they're confident on a good second half. I actually did notice that NIM. There was a NIM in the presentation, and I actually did see it. But I didn't think people would take notice to it. Yeah, NIMs did increase, but it's fairly low. Was it 1.6% or something like that? Yeah, 1.6%. Of course, I'm not sure where exactly it is. AMP, there's the AMP Bank. I'm probably going to go straight past it. Here we go. Here he is. Net interest margin, 1.3%. So it went up from 1.24% to 1.3%. I was like, okay, fine. And I'm pretty sure that net interest margin is fairly low compared to other banks. So it's interesting that they didn't mention this is an improvement, and that's why the share price might be up. Okay, now onto the chart for AMP. And I have traded this in the past. Oh, no, the wrong company. There's quite a few AMPs in the world. So I had this is the weekly chart. So in fact, if you have a look at the weekly chart for AMP, it's been a capital destroyer since it listed back in 1998. It's been horrendous. This is exactly the opposite chart you want to see for a long-term holding. So they're definitely not a company you want to own for the long term. I'd say this is more of a trading stock. Now, in saying all that, there is indications just by looking at this chart how the share price has gone sideways for 5 years or so. And if the share price gets above $1.80, that would be a breakout, because that was a high as the share price reached back in January 2025 when I was trading this. So I was trading this, and then I got out because they released their results in February and the share price plunged. Look at that. Share price plunged 14.86%. That was an automatic sell. And you can see the share price has recovered. has recovered. So it took a while. So yeah, it took a while, but that was a beautiful uptrend before they released the results, and a positive reaction today. Although, as I mentioned, the share price initially was down. So this is another case where you don't sell or buy on open, because you would have sold this on open at $1.60 and gone, why is the share price now up 10% from when I sold? So we see this fair bit where the market reacts quite a bit different from the opening. So the share price has rallied a fair bit in the last few months. So yeah, not for me at this point in time. Okay, next on the list, coming in number 3, we have Neuren Pharmaceuticals. Share price was up was up a little bit more than this, but the share price currently up 3.76%. Looks like the share price was up almost 10%, like 8% at one point today. So we have seen a little bit of selling coming in, which is sort of understandable. They released debut second quarter results, and I don't know. I had no, since I am a shareholder, I took notice, but have no problems with this. I didn't think it was amazing either, but everything is just going to plan for debut and Neuren Pharmaceuticals. So what can you say? I just thought it was just, yep, okay, let's move on. But the market did like it. And in saying that, that's what I'm going to say about this. The market did like it. Cater reiterated full debut sales of 380 to 405 million. So Neuren will get nice royalties from that, totaling 62 to 67 million dollars. So go Neuren Pharmaceuticals with those nice royalties. Now let's have a look at the chart. This is probably the more fascinating aspect of this announcement. So I actually do own shares, and I'm also trading Neuren because of this particular chart. So this actually announcement was a little bit more pertinent to me because I'm trading it. So if there was a negative reaction, I might have sold out of this trade, but at least there's been a positive reaction. And we definitely have seen a shift in sentiment, and definitely the trend in the share price of Neuren Pharmaceuticals in the last 2 months. So sentiment was negative. Then all of a sudden we started to see share price rising, moving to an uptrend. And since then, share price has gone up. In fact, my position in Neuren is up 20% from when I traded. The one thing I'd like to see is some bigger volume coming in. I'd like to see some nice volume coming in for Neuren Pharmaceuticals. Okay, so that's coming in number 3. Next, we have EROAD. This one, share price up 27.57% on announcement released at 1:22 p.m. EROAD applauds push for smarter, fairer road user charging. I was like, okay, share price up 27% because of that. It's not market price sensitive, but you can see share price is up. So obviously, it's price sensitive because otherwise share price wouldn't be up. Maybe it's a little bit of noise. So this is a New Zealand thingy. So Transport Minister Chris Bishop announced at the Infrastructure New Zealand conference today that the government plans to transition all New Zealand vehicles to electronic road user charging. So as New Zealand transitions away from fuel excise taxes, ERUC, or Electronic Road User Charging, offers a future-ready and proven solution that reflects how we actually use our roads. It's a system that's not only equitable, but also more efficient and better aligned with our climate and infrastructure goals. Okay, so this must benefit EROAD. Oh, by the way, yeah, it definitely does, because they mentioned here, EROAD has already played a key role bringing ERUC to New Zealand with the world's first GPS-enabled nationwide solution for commercial fleets, and believes New Zealand is well positioned to lead the way in rolling out ERUC solution for all vehicle types. Okay, so you don't know EROAD all that much, so obviously this really benefits the company, although it's not market price sensitive, this announcement. EROAD collecting over $9 million in ERUC last year alone from commercial fleets and heavy vehicles. I can definitely say why this is going to be beneficial. So they've already rolled this out to commercial fleets and heavy vehicles. Okay, so there you go. All vehicles. Government will be monitoring you from now on. Sort of makes sense. Anyway, let's have a look at the chart for EROAD. This was interesting. They did release a pretty good, I think it was an update or something. Here it is. Share price took off back in May. Share price it pulled back. That was actually would have been a nice pullback to get in on. And now today, so I wish I was trading this now. I was very close to buying some shares at about 90 cents. Actually, it would have been about $1. The day they released that good trading update, I should have taken notice to it because that was a really good day. Okay, so that's EROAD. a really good reaction, I should say. Not a good day, a reaction, good reaction. Okay, let's have a look at the stock of the day. A little bit biased. I am a small shareholder of this company. XReality Group, it's in my super. So I'm not trading it. I have no intentions of trading this one. There's a reason why I do own shares in this company. They're in the right space, XReality. They're cash flow positive. That's the other thing. And I just didn't understand why the market was paying any attention to this company, because they're in the right space, a growth area, and they are cash flow positive. If you don't believe me, I'll do not a standalone video, but I'm including this video in my Appendix 4C series. Not many more to go in that series, by the way. And this is the most recent Appendix 4C. And they were operating cash flow positive by $1.3 million for the quarter and $3 million for the year. Now, they do spend a little bit of money on intellectual property, which is capitalized research and development, but they were still, if you take that into account, positive, cash flow positive for the quarter. And the market just didn't care. And I was like, what? Was like, what's happening here? Come on, market. And then finally, the market may have been awoken today. Now, we have seen a little bit of selling coming in today, which is understandable because we'll have a look at the chart in a second. Share price did get to a high of 4.9 cents, currently 4.1 cents. They released two announcements today. So a 5.71 million state of Texas contract for Operator XR, and they've been awarded a 2.1 million grant from the government to scale Operator XR. So obviously the Australian government says, hey, this technology is going to be really beneficial. Maybe. I didn't really have a close look at this. Awarded a merit-based grant as part of the Australian government industry growth program to accelerate Operator XR's AI product roadmap, becoming a leader via tactical training offering across the law enforcement and defense markets globally. Now, that announcement was like, whatever. But it was the 5.71 million state of Texas contract. Yes, the state of Texas has said to XReality Group, we like what you're doing. So, yeah, there you go. For the whole Texas Department of Public Safety. There you go. So was it 3 or 4 years? 4.3 million initial order with 1.4 million option for additional support services to be delivered in years 3, 4, and 5. There you go. Anyway, so by the way, this company also has indoor skydiving. They also have this, forget what it's called, reality, some sort of play park, theme park, which I don't really care about. I have a feeling they might be trying to sell out of indoor skydiving, but virtual reality, augmented reality stuff for military and law enforcement, that's the main thing. That is the main thing. So training using VR and AR for military and defense. And that's why I'm interested in this company. So let's have a look at the chart. And this was a surprise. This chart got me. I looked at this the other day. It's like, there's just no interest in this company. No interest. And then all of a sudden today, a little bit of interest, but we have seen a little bit of selling because people who bought at higher prices say, oh, wow, I've got my opportunity to sell out of this dog stock. It's operating cash flow positive and free cash flow positive, but who cares? It's a dog stock because the share price has dropped since I bought in, and I'm a crap investor, and I just set out because I just think share prices should increase. As soon as you buy into a company, share prices should increase straight away. Anyway, so there is a bit of resistance moving forward for XReality Group, but it's not a big company. It's not a big company at all. Market cap, was it 30 million? Even after rise today, 30.49 million. So it's not a big company. For a company that's operating cash flow positive, free cash flow positive, and in the right sector, a really good potential growth sector. Not potential growth sector, a definite growth sector. Anyway, so that's the stock of the day, XReality Group. Now on to the chart of the day. Inspired from Fishball. Perenti for chart of the day, ? It does report at the end of the month. Well, yeah, I think most companies are reporting this month. We can see exactly when they might report. They might have released it. No, they haven't. Notification of claim. Sometimes companies will release when they when they are releasing their results. They haven't mentioned it. You could have a look back at last year. When did they release results in August last year? The 20th of August. There you go. So let's have a look at a chart for Perenti. More than likely, this is going to look pretty good because last time I looked at it, it looked pretty good. and it's still looking pretty good. So a nice chart for Perenti. And I was trading this at one point, and then I got out. So I got out on this day here, 24th of February. So for some reason, the market didn't like the results. I didn't understand it, but I have my rules. I got out. And sometimes those trend killer events go the opposite direction. This is one. They're rare, but sometimes it does happen. Okay, so that's all I have. And what can you say about this chart? It's a brilliant chart. That's all I have for this particular ASX Today Rundown video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.